In today's MTPredictor video, I'd like to look at using the higher time frame DP or decision point levels to help go for a further out profit target to help to run your trades a bit further. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, the setup I want to look at is this W3 or Wave 3 trade setup here. Let's have a quick look to see how this was set up. For those of you who are new to MTPredictor, we're not a black box system. We don't trade 100% of the time because we know and understand that markets are random about 50% of the time. So we only look to trade when the pattern's clear. For this we go out to the higher time frame chart. For a 4-hourly chart on Forex it would probably be the daily chart. If you're trading daily stocks it would probably be the weekly. If you're trading 3-minute E-minis it would be the 15-minute. I'm just going to use our training mode and go back to here and show you how we place our DPs on the chart in advance. Here is the prior pivot high. So we right mouse click over this pivot high, do decision point. The only levels I'm using are the typical. I'm not using the maximum because the typical are, as the name suggests, typically where markets tend to reverse. Can you see how this is on the chart in advance? They're leading indicators. They're there ready for you. What we're looking to do now is, if I turn trading mode off, we're looking to see when the market reverses at our level. In other words, if it does what we anticipate. So if I go back to the 4-hourly chart, you can see how the chart looks very different now, in that here's our daily resistance level. Can you see that up there? The market reversed at our daily resistance level. Our MTP trend went from blue to grey to show the market was making a reversal. The market trend was therefore deemed down. Our MTP trend turned red, therefore you'd be looking for sell setups, not buy setups. So that's what we're looking for the initial trade setup. This was considered a W3 or Wave 3 trade setup because we start our Elliott wave count. Again, we don't use Elliott wave counts 100% of the time as traditionally taught. We use them in isolation, our unique isolation approach, again because we understand that markets are random half the time. So it only makes sense to use a pattern when the pattern's clear. And for this we start our wave count at the higher time frame resistance zone, which is here. The initial move down will be wave 1. We then have an ABC correction in wave 2. Therefore we're looking to trade a wave 3. That's why this W3 or wave 3 trade setup looks to project the, if I place the analysis on, the profit target at the typical wave 3 WPT. In other words, the area where most wave 3s are likely to go to. We like these trade setups because the profits are normally large, not just in dollars, but in risk reward units. So you can see at this level here, the profit was approximately 6.5 or 6.5 times the initial risk. It wasn't stopped out at that bar there, close, but not quite, so the market trade would have come down. So in this video I want to look at how this fits in with the large degree trend to see whether there's a place where we can look to extend our profit target out. So if you're back at this particular point here and you're coming into your typical wave 3 WPT here, could you look to try and run this a bit further? Well, as we said at the start, we use our higher time frame DP support and resistance zones to then gauge our clearer larger degree trend. So we can do exactly the same for a potential profit target. So again we go out to the higher time frame. I'm going to go back to where that profit target would have been, which is about here somewhere on the 4-hourly chart. Go back to the prior pivot low, which is here. Right mouse click, do decision point. Again, can you see how that's on the chart in advance? So that would be there before the market even got there. So what we're looking to do is we're looking to try and couch our trade management in the context of the higher time frame support and resistance zones. So I'm just going to turn that off, go back to the 4-hourly chart, take that back to that bar as where I should have been before, where it came into that typical wave 3 WPT. But can you see how this higher time frame support zone still had a little way to go? In other words, we weren't at this support zone. So if you're a bit more experienced or a bit more of an aggressive trader with MTPredictor, you could look at this and say, rather than coming out at this typical wave 3 WPT, I'll look to try and extend this down into the higher time frame support zone. In other words, we're looking to use the higher time frame to gauge our larger degree trend. In other words, we're looking at the trend is down into this higher time frame support zone. And as you can see, that would have increased the profit from approximately 6.5 times to approximately 10 times the initial risk. If I turn trading mode off, you can see that's exactly what happened with the the euro Canadian dollar carrying on down past this level and went into this higher time frame support zone where it made a low and then has now been rallying up since. So this would have been the ideal place to take the profit. But can you see how we're using the higher time frame support and resistance zones on the higher time frame chart to help gauge or place your profit targets on your time frame you're trading? So in this way, it allowed you to increase your profit from the normal typical wave 3 WPT profit target, which would have been here, which at that point would have been a very nice 6.5 times the initial risk profit, to then increase that down into the higher time frame support zone, where a profit of approximately 10 times the initial risk would have been available.